options trader and investor, how should you position yourself going into November 2025? This is what I'm trying to answer in today's video and just trying to share my thoughts on the first trading day of November. So looking at the news over the weekend, Warren Buffett is hitting the record high cash pile, which in this chart was less than 350 billion, but if you take a look at the news, it just went up to $381 billion, which is a huge jump. Semiconductors. There's a very interesting correlation between 200 SMA and the current top in semiconductors ETF over the last 5 years. As you can see here, whenever the difference hit 100%, meaning double, there was some kind of a pullback and correction happening very, very quickly after that. Similarly here in 2024, we've seen a correction right back to the 200 moving average, and right now we are at the same position where we did hit this 100% or double the SMA, and we could see a potential pullback, maybe not to the whole level because of the AI hype, but let's say to the $280 level would be a reasonable pullback. I've also noted these timelines because they will be very, very useful for our option strategies. Additionally, S&P 500 did bounce a little bit above this expected range. So this could be an outlier or it could be a start of a new trend. We don't know. What I do know is that currently VIX is at a relatively low level compared to the past few years. So I'm trying to position myself according to VIX. If the VIX is very low, it doesn't pay off to sell as many cash secure puts as it is when the VIX jumps high. Similar to Warren Buffett, I do think right now, given the situation in the market, it is wise to go very, very heavy on cash and hold it in your money market sweep account. What trades I will be doing is, taking some profits and getting ready for some correction, selling cash secure puts on the quality stocks. But also I'll be starting a series on getting from a 10K to 100K just using credit spreads. So I'll be looking at this for opportunity at getting some very, very good defined risk credit spreads. If you're interested in how I'm going to do it, subscribe to this video. But a sneak peek here is how I look at my targets and my strike prices. First here, let's go to a log chart on SMH, and we can clearly see there is a very, very nice trend going on here that we did not hit yet, but we might hit it. Let me just move this a bit to the sideline, and this level comes right about 390. So my hypothesis is that semiconductors will not go above that level and they will have a slight pullback in time. So I'll use those two informations to my advantage. I will also take a look at GEX levels. All right, so we did develop a free real-time GEX calculator because there was no one online that had the actual real-time data. I will also take a look at SMH here to see where is my call wall and where is my put wall. I'm interested in 45 DTE, so this comes right about the monthly option expiration date. And let's take a look at the call wall. All right, so call wall is right about 390 level, which matches our chart to the point of perfection. So this is not a guarantee the price could go above 390, but it does show us that there is some potential in making good credit spreads. So here I'll take a look at the range of 380 to 400 on SMH just to see what is my potential profit. All right, here we can see that 390 is trading right about $8, and then let's say 400 can be about $5.5. So there's a, let's say, $2.50 premium for $10 spread, which is 25% return on your capital. and delta is about 25 in the middle, or 27 actually in the middle. So just doing a quick napkin calculation, yeah, this option is priced right. The risk to reward does match the delta, and maybe it's even slightly below the delta, but I do believe it's a high probability trade based on my analysis, and I will consider this trade. Additionally, SOXL is a triple leveraged semiconductor ETF, and if we do see a 50% pullback in semiconductors, here you remember the dates, it can take a while. It can take 280 days or actually even up to 1 year to see this kind of pullback. But if you do see the 50% pullback, the triple leverage will get crushed and probably go below $10 value. So I'm considering a LEAP put option on SOXL. So let's take a look here. I believe expiration in January 2027 will have a premium about $7 for $35 strike price. So here I will be taking a look at this level right here and saying we will go below that in the long term, but my premium of $7 means price would actually have to go below 2028 level for me to make a profit and be completely intrinsic value positive. So if our hypothesis is correct and we'll have a 50% pullback, this is going to become a very, very profitable trade. On the other hand, it just provides me a bit of a cushion, a bit of a hedge going into this potentially volatile market. Last thing I did here is I bought some short-term call spreads on VIX. I did not have any profitable trades on VIX yet, but I do believe we are coming into a very, very volatile season with potentially rate cuts in December not going through, and a very, very sluggish earnings season, in my opinion, from most of the S&P 500. So it's going to be a very, very interesting November. I'll try to share my updates and my trades as we go. But if you want to follow the real-time updates, you can join our QuantWheel copy trading feature, where we do have a few traders here featured. And if you just go to my name, I will have multiple accounts here soon, and you can subscribe to different kind of account values and follow in real time the trades I'm making. There might be a 50-minute delay on my spread account, but that's for compliance reasons, and a longer delay on my Fidelity account because Fidelity has a 1-day delay. So if you're also interested in being featured trader, please do reach out. There's an email linked down below in the email.